Hello everyone, welcome back to my channel. In this video, we're going to do a trade breakdown. It's been some time since my last trade breakdown, and the reason for that is that pretty much all my trades are the same. So same model, same setup, same entry, everything is the same. But this trade is a little bit different. It's more interesting because I used different time frames. On this trade, I used the hourly as my higher time frame bias. I used the 5 minute and the 15 to confirm that, and finally I used the 1 minute to execute. So if you are a scalper, right, then this video is for you, and you will know exactly how to use only the 1 hour. So no need for daily, no need for the 4 hour. All you need is that 1 hour time frame as a bias, and you can just scalp on the 1 minute time frames in and out in a matter of few minutes. And without any further ado, let's just get started. Alright, so first of all, let me show you the executions, right? So here's a trade. As you can see, it was on the 1 minute time frame. Entered here, short scalp into here. And now let's go to the charts and explain what I saw on the chart to take that trade. So as always, we use the concept of internal to external and external to internal range liquidity, right? So basically, price expands higher, it retraces, and then a retracement or a pullback expands higher and then retraces. So price must retrace after an expansion. Price cannot just keep going up and up and up, right? It needs to pull back right here. So after each expansion, you can always expect a pullback. And on that pullback, you can capitalize on a move, a scalp on the lower time frame. So in our example, we use the 1 hour as our higher time frame. So we're going to use the lower time frames to scalp this move right here. So from here to here, this small, we're going to capitalize on that. So and basically, this is the bias on the 1 hour. We want to look for a pullback, right? And guys, you don't need a daily time frame. You don't need the weekly. All you need is the 1 hour time frame. And price is fractal, so you can use any time frame. You can even use the 15 minute as your higher time frame and the second charts for the entry. So for my model, I need 3 time frames to confirm my idea. I need the 1 hour as my bias, and my bias is to go down for a pullback, right, after an expansion. And we have that here. So after that, we need to confirm that. We need to confirm that the market is ready to pull back and it doesn't want to go even up, right? And then pull back. So we need the intermediate time frame to confirm that the pullback is that it's time for the market to retraces. And for that, I used the 15 minute time frame. So if we go to the 15 minute, let's see what's going on the 15 minute time frame. So as you can see, the market traded lower, all right? And then one more time, trading higher, taking this high. All right, so this is a sweep on liquidity. So how do we know that this is a sweep on liquidity? Not here, right? You can't just short from here, but you need more candles to confirm that this is a sweep on liquidity. So what do we have? We have an expansion higher, all right? That expansion left a fair value gap, a bullish fair value gap. So the ideal scenario, if price wants to continue up, it needs to respect this fair value gap. So the candles pretty much, so the ideal scenario would be the candles stay on this fair value gap. Maybe the wicks go through this order block and then pushing higher. But this is not the case for us. As you can see, the candles are closing below this fair value gap, right? And it is using it as resistance, right? So this is one indication that price wants to pull back, right? And it doesn't want to push higher again. So this is one indication, but the first indication that price wants to go down into that fair value gap, right, is this. We have a change in the state of delivery on this candle right here. So after taking this liquidity from here, right, price immediately rejected and closed below this last up close candle, right? And as you can see, the next candle or the third candle traded higher into consequent encroachment of that candle, right? and then price went lower, right? So this is the first indication. And the second indication that we are on a sell program is this closure below this fair value gap right here. So this is what we have on the 15-minute. And as you can see, we are going time frame by time frame. All right. So let's go to the next time frame and let's use the 5-minute and see what's going on. So as you can see, price now are disrespecting or violating bearish or bullish BD arrays, right? And now it is respecting bearish BD arrays. So we have this fair value gap right here. We pushed lower and then another expansion. Price retraced to what? To this order block right here, to up close candles. So when you see that up close candles are supporting price to go lower, right? So up close candles, you know that we are on a sell program, right? The sell program is activated. So this is what we have on the 5-minute. Price is continuously pushing lower and continuously, right? We have another up close candle, and as you can see, it offered resistance, right? So we know that this is a sell program. So we confirmed our bias from the 5 and the 15 minutes. Now all we have to do is to go to the 1 minute and look for entries. So let's see what do we have on the 1 minute time frame. So on the 1 minute time frame, as you can see, this is a market maker buy model. So from here, this is the sell side of the curve, and then we pushed higher to take all this consolidations and this original consolidation. After that, now after we clear this original consolidation, now we switch to a market maker sell model to target this original consolidation right here and inefficiency on the 1 hour time frame. So same as we did on the 5-minute and the 15-minute time frame, we can see that price is respecting fair value gaps, bearish fair value gaps and bearish order blocks, right? So we have this fair value gap right here, price returned to it and then rejected to the downside. And now one more time, coming back to this up close candles, right? So price is fractal, as you can see. What you see on the 5-minute, you will see on the 1 minute, right? So this is an order block right here. Let me mark it for you. So expansion lower, a pull back into that order block, and then one more time expanding lower. And what do we left? Right, as you can see, up close candle. So up close candles, we confirm that up close candles are supporting or offering resistance, right? So I entered from this up close candle right here, as you can see. My stop loss above the candle. I know that price should not violate that, right? And my target is this original consolidation. And as you can see, beautifully price pushed to the downside, right? And this was like what, 1, 2, 3, 4, 5 minute to hit TP, as you can see here. So entry from that order block right here. So I believe we have come to the end of this video, guys. If you have any questions, please DM me in my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.